Hi, we've rated the Vaishnavi Tech Park opportunity of MYRE Capital, where SmartWorks is the tenant and Grow is the subtenant, as 8.5 on 10. Hi, this is Raja.
Hi, this is Rishi. We are from Invest In Pre-leased. We help you profit from curated pre-lease proposals.
And if you like our video or don't like our video, please comment and let us know why. Also, if you want future updates on other fractional ownership opportunities, please subscribe to our channel. With that, we now take you to our review, and this is the new rating system. We are calling it 2.0. If you want to know the logic behind overhauling and why we've done this, you refer to our other video. The link for that is given in the comment section in the description also. And with that, we start with this. Rishi, what do you think about the tenant?
Yes. So Tenant is, like Raj said, SmartWorks. SmartWorks is in the field of managed workspaces, and we have been following this tenant for quite some time. They are managing 4+ million square feet of space right now with them. They are backed by Capital and Singapore. Like we say, SmartWorks is a beautiful tenant business model where 90% of their clientele is an enterprise client, where you have a B2B clientele on board, which is doing the business with them.
Could you explain a little more about B2B, Rishi?
Yeah. So B2B is basically business to business, where you have corporates or MNCs which actually tie up with you for a longer tenure. So number of seats are being actually locked by these tenants for a longer tenure. And that's the reason this B2B model is existing. And that's the reason SmartWorks is actually doing wonderful numbers as well. So like we said that SmartWorks is a very good tenant to have. And that's the reason we are going ahead with 0.5 to 0.5. Again, here we have introduced one more criteria, that is whether the tenant is a Fortune 500 global or India Fortune 100. The reason is there were previous assets which we had come across where there were certain tenants which are really part of Fortune 500 or probably India Fortune 100, and we really wanted to give them that edge of having that tenant on board, and that's the reason we have introduced this. Unfortunately for this case, SmartWorks doesn't qualify for this for now, but we really hope that SmartWorks enters this list soon, and that's the reason we have taken away that 0.25 for this particular point. Raj, what's your take on the profitability of the tenant and the tenant industry outlook?
So the holy grail of all business is to make profits while they create value. Obviously, SmartWorks is creating a lot of value because we see that they have got some fantastic tenants. Not just in this case, it's Grow, but otherwise they've got Amazon, they've got Microsoft, they've got the likes of OLX and all these great tenants. So profitability is key. In this case, they are profitable. They are in fact one of India's largest managed offices player, and therefore it gets 0.25 on 0.25 there. In terms of the industry outlook, we understand that the managed office space is growing significantly, growing very well because a couple of reasons. When COVID hit, people realized the need for decentralization. People want their team members to not travel as much, so they are having a distributed model. Also, because of COVID, people are now worried about if there's another pandemic or anything situation like that, you don't want the entire team. If you are housed in one place, the risk is higher, and therefore they want to decentralize. Plus, commute to the workplace shouldn't be as much. The third thing also is the fact that people thought कि boss work from home होगा, but work from home अपने situation में given our country's infrastructure even at people's homes, and the fact that teamwork and all of that suffers when it's at home. So people have realized कि boss office तो जरूरी है, right? There are a few basic principles of working, like for businesses profitability, for working you need to have that synchronization, etc., all those things, and therefore it's important to have office people getting into the office. So that's one major reason. Second is also there's an economic reason. Now if somebody was to take a floor plate of, let's say, 20,000 30,000 square feet, they have to spend significant money. Like that's a lot of capital expenditure on the space, right, which is sunk into the place, right? That may not be an ideal situation, because now again with COVID, people have realized that cash flows have been stressed, and therefore what people want to do is they don't want to spend so much on capital expenditure. They rather have managed office spaces where SmartWorks in this case will do up the office. They'll make it a plug and play system, and they pay on a monthly basis. So they deploy this capital into their business, right? So which makes a lot of business sense also. Therefore, all in all, if you see, the tenant industry outlook is excellent, and you get 0.25 on 0.25.
Raj, will this help companies have multiple locations?
Yeah, companies could spread out, and they can have multiple locations. Again, it's connected to the fact that going to the workspace shouldn't take so much time. So yes, it also helps people spread out their team, whether it's in different cities or different micro markets within the city. So with that, overall, knowing your tenant out of 1.25, this opportunity gets one. We now go to knowing your asset. So Rishi, what about the asset grade?
Sure. So, like we have always mentioned earlier, that we try and visit the asset, and we have done this in this case also. We had visited Vaishnavi Tech Park in the month of March, where VTP one opportunity was launched, and again at that point in time it was under construction. We have again visited the asset in the month of May, mid-May, and we have seen that the asset was ready, the OC was in place, and people have already started with the fit out work. So, like we said, Vaishnavi is known for developing grade A parks, and this is also one of the grade A parks from them. The Vaishnavi Tech Park, yes, Raj.
Any other marquee tenants in the asset?
Oh, yes. So, you have two amazing tenants apart from SmartWorks. You have Ocwen and you have Discovery occupying multiple floors in this particular asset as well. And this adds value because you know that coming of Discovery, a company like Discovery coming on board, you know that the asset is really worth going in for, and that's the reason we are going ahead with 0.5 1.5 for this particular asset grade. Again, in the video which is explaining our rating system, we have introduced this IGBC rating. That is a very important criteria for us to evaluate any asset, and we are happy to announce that this particular asset, that is Vaishnavi Tech Park, is already Platinum LEED certified, and that's the reason we are going ahead with 0.25 0.25. Raj, can you guide on the OC? Yes, Raj.
Before that, Rishi, just wanted to ask, does the IGBC rating mean that the asset is going to be in a little more demand than the other opportunities, and why?
Oh, yes. So your exit and your releasing will become very, very important and very, very easy when you have an IGBC rated building along with you as an asset. The reason being, when you talk of IGBC, there are certain criteria which a developer has to fulfill before you get that IGBC rating certification. Of course, this adds to the climatic change which we all are facing right now, and it helps balancing that. The outflows of an asset goes really low because these are energy efficient buildings, and that's the reason the maintenance of these buildings is little lesser. Yes, Raj.
You mean maintenance when you say outflow?
Yes. So outflow is basically maintenance of the building, and these maintenance goes really low. For example, you might have rooftop solar mounted panels for taking care of the electricity, and there are various rainwater harvesting. There are various other criteria which are part of this LEED certification or the IGBC certificate. Raj, again, your take on the OC received and whether the asset can be subdivided or not.
Yeah, so in this case, the occupation certificate has been received. So we are giving it 0.25 on 0.25. We have other opportunities where the OC is not received because they could be built to suit opportunities, which is customized. Typically, this is when, let's say, a developer is still making the building. It's still, the asset is still under construction. And, a tenant commits that I am willing to take this, but you customize it. It's like customizing your own pizza in one sense. So, they customize the entire space for their own needs. In that case, OC is going to be a little far away. We wanted to differentiate that between a ready property and the fact that it could be a build to suit. Build to suit, again, the timelines could kind of go a little haywire, etc. So there is that slight risk there. Therefore, if the OC is received, you're going to get 0.25. In this case, it has, so it gets 0.25. In terms of subdivision and independent access, why this is important is because tomorrow, this is a large asset. It's got about 30,000 square feet of floor plate, right? Now, we don't have, let's say, for example, if today there are 10 people, this is a hypothetical example. If there are 10 people in the market who are looking at a 30,000 square feet of space, if you were to divide it, maybe make it half, 15,000, or if it was even further more divisible, the number of tenants could probably double or maybe even go 3 times or 4 times, which means our cycle for renting it out eventually, right? Obviously, we hope we get a single tenant, but we have to also plan for the future. So tomorrow, when, let's assume after 5 years, 10 years, whenever, SmartWorks leaves the place, and if you're looking for another tenant, if you are able to subdivide it, it's a big, big, big plus. And therefore, we also recommend that if an asset manager is looking for space, they should consider this. In this case, it's available. So therefore, 0.25 on 0.25. And Rishi, what about the asset location?
So we are very, very bullish and very, very strong, and definitely our strongest critics when it comes down to the asset location. because your entire profit, exit, leasing, releasing, but depends on the location that you are in. So we have assessed VTP's location, and we are definitely very, very strong in Gango about the ORR, that is Outer Ring Road, that's coming up, because you have amazing tenants in the vicinity. You have Wipro, you have HCL, you have Microsoft, you name some companies and they are there present in this vicinity. The best part about this particular location is it is turning out to be a central business district where you have work-life balance, where there is a lot of good residential complexes that are in the vicinity. You have schools, you have hospitals that are there in the vicinity, which adds a lot of value for the employee to move in. So that walk to work culture is actually being implemented, and they can save a lot of time and create that work-life balance. And that's the reason. And yeah, one more thing we would like to add is there is a metro that's already coming up. The work is in full swing. And we feel that this will add a lot more to the connectivity across Bangalore. And that's the reason we would want to give a 0.75 on 0.75 for this particular asset location. Raj, coming to the next thing. What's the big deal?
So just taking one step behind, knowing the asset gets full 2-on-2 here. Now coming to the deal in terms of, the transaction, everybody understands that, there are a lot of parameters when doing a deal. So we start with the duration. We expect a minimum of 5 years. In this case, it's 9 years and about 11 months. So again, 0.25 on 2.5 there. In terms of lock-in, we expect a minimum of 3 years. They've got a 5-year lock-in, give or take a couple of months here and there. 0.3 on 0.3 there. So Rishi, what about the penalty or corporate guarantee? This seems like a new point.
Yes, Raj. So we have incorporated this to ensure that the investors are protected when they're getting on board. This clause is very simple, very, very, very relatable, because when there is a breach in the contract from the tenant's end, then what is the safeguard measure that has been taken to protect the investor's interest? Yes, Raj.
Are you saying breach during the lock-in or general?
Breach during the lock-in and even general as well. So if there is any breach of terms of any of the contract that is signed, then the tenant is liable for the penalty clause and the corporate guarantee clause. So we have certain assets which had come in the past. For example, we had Rendox from the Strata's end, where they had a corporate guarantee from the parent company in the UK. Again, in this particular case, there is a penalty clause from the SmartWorks end, wherein if there is a breach of any terms and conditions from their end, then MYRE can absolutely terminate the agreement. In this clause, if 2 months of rental is not being paid subsequently, then yes, MYRE definitely will terminate the agreement, and for deposit will be forfeited. And hence, again, we are going ahead with 0.2 and 0.2 for this particular asset. Now, we have, yes, Raj?
Rishi, also another point, that we were discussing, the fact that, in this case, SmartWorks is taking a bare shell opportunity. And when they start, it will be a fully furnished one. So would that make a difference eventually when you find a new tenant, or do you think that the rental, therefore, because of this unique situation, will go up?
Yes. So right now we are providing a bare shell unit to the tenant at SmartWorks, and SmartWorks is going to furnish the premise. Now, definitely when a tenant is adding value to the premise, there is a little less likely chance of the tenant moving out, unless there is a very strong or a very uncontrollable situation that arises for the tenant. And it adds value to the landlord or the developer or the owner of the premise, because you have a very fully fitted out premise that is in possession with you. And definitely the capex goes real low for the tenant who is moving in as well when the SmartWorks moves out. And that's the reason it's a value add as well. So that's a very valid point, Raj, that you have highlighted. Moving to registered agreement or a registered agreement to lease or an LOI, that is letter of intent. Now, we have had experiences in the past where the assets had been bought purely on the basis of LOI signed. Now, LOI is again a letter of intent, which is not enforceable in the law. So the document, it cannot be enforced, and that's the reason there have been deals where the premises have been bought and they are still remaining vacant or lying vacant in terms of the rentals not happening, and investors are paying outflows from their pocket. That is the maintenance amount. And that's the reason we wanted to highlight this, and that's the reason we have given 0.5 also as a weightage to this particular document. What is a registered lease or a registered ATL? Sorry. So agreement to lease is basically, now we do have a similar example of agreement to sale, wherein there are certain conditions that are to be fulfilled by the developer or the seller in terms of before doing a complete sale of the premises. And here again, it actually is happening in the cases of BTS, that is build to suit assets, agreement to lease is signed. In this particular asset, we have a registered lease deed in place, and that is of 9 years, 11 months. And that's the reason we are again going ahead with 0.5 on 0.5. Raj, would you want to throw some light on the increment and how important it is?
Yeah, so increment, typically industry standards are 5% every year or 15% after every 3 years. In this case, it is 15% after every 3 years. The increment though starts from 2023. The reason why this is happening is because SmartWorks has gotten a fit out period for that much long, and they will consider, the start date as 2023. But having said that, we are getting a 15% increment, and therefore we are giving it 0.5 on 0.5. In terms of the rent start date, it's important that the rent starts immediately, because you don't want your money or the investor's money to just be lying idle. So therefore, in this case, the ideal situation is, maybe at about 15 odd days is probably acceptable. But beyond that, we expect that there should be some money that will come back to the investor. So therefore, in this case, it's about 45 days. So from 0.25, we've taken out 0.10 point. So therefore, rent start date, because it's going to start 45 days after the drawdown, the rent is going to be 0.15. Now, in terms of the deposit, ideal deposit is 6 months. This one, it is 4 months. So again, we have to take away certain points here. So we're giving it 0.15 on 0.25. Rishi, what about the notice period? In this case, we see that you've given it only 0.15 on 0.25. Why is that?
Yes. So, like Raj, notice period is also one of the very critical elements as you have a lock-in or a registered lease that is in place. This gives a comfort to the investor, because once the tenant is moving out, the larger the notice period, it gives that comfortable time for the investor to look out for the next tenant to get on board. So ideally, we always keep that 6 months is 0.25, and less than that, 3 to 5 months is 0.15, less than 3 months is 0. In this case, we have 4 months of notice period, and that's the reason it falls in 3 to 5 months, and that's the reason we are giving 0.15. So Raj, what's the take on ROI?
So, everybody is concerned कि भाई कितना देगी finally. So therefore, the ROI or return on investment from a rental yield perspective, the net average ROI for the first 3 years is 7.4. Ideally, again, it should be 8%. Therefore, we've taken away 0.25. So out of 1, we've kept it at 0.75. Now, one thing I just wanted to point out is that initially a lot of asset managers realized that everybody's considering the entry yield, and therefore they started doing top-ups and all of that. So therefore, to have a bit of a level playing field, so that the entry yield may look very attractive, but the next year it drops by 1.5%, is not an ideal situation. So therefore, we've now are going to take the average ROI for the first 3 years. Rishi, what about the tenant stickiness? Is SmartWorks paying lower than the market rent?
Yeah, so people would always see that this particular point was always clubbed with the tenant profile earlier, but we have brought it down to ROI here. Now, this basically is important for us to understand that if you have a market rent that you are going to provide to your tenant is lower than the market existing out there, then the tenant is going to stay for long. In this particular case, 60 rupees is what the SmartWorks is going to pay. And if you look at the micro market location out there, we are well below the market, and that is one of the most attractive points for any tenant to grow on and to stick around. The reason being, when you have below market rentals, even after the increment, you become either at par or you're still below the market level rentals, and that is a very, very added point for a longer stick-in for a tenant. Raj, what do you think about the capital expenditure by tenant? And in this case, has SmartWorks done any expenditure?
So yes, capital expenditure is very critical, because once the tenant has invested so much money into the asset, their likelihood of leaving the place reduces, right? Again, SmartWorks model is that they take a bare shell place, invest, and make it like a plug and play office for all their tenants, right? So therefore, it's a big plus here, because SmartWorks is going to invest very heavily. Because also, if you see, most of their clients are A-grade marquee tenants, and those guys will not settle for anything than the best in terms of furnishing and the fixtures and all of that. They want a great environment, the latest kind of a work environment, etc. So therefore capital expenditure is done by SmartWorks. It gets 0.5 on 0.5. So total ROI out of 2, it gets 1.75. Now Rishi, in terms of knowing the asset manager, what do you think of MYRE Capital and the team?
So one of the most critical elements of the entire review is the asset manager. How good is your asset manager and the background team that they have? We have been following MYRE Capital for quite some time, and we know that the team that's managing the show is really good. Ariman and his team are really up to the mark with the kind of work they are doing, the scrutinizing of the asset, due diligence in every aspect of it. So again, the biggest plus point for them is they are being backed by Morphogenesis. Morphogenesis is one of the top-notch architectural firms of India, again headed by Manik Rastogi. They have some amazing value projects to their names and amazing clienteles. To name a few, they are doing the Surat Diamond Boards. They have done the Maker Max City in BKC, which is commanding the highest rental of the BKC. And again, being a 12 to 15-year-old asset, it doesn't look like a 12 to 15-year-old asset. So you know that what kind of quality of work they bring on the table. And that's the reason we are going ahead with 0.5 on 0.5 for this particular aspect. Again, we have come down to this, like Raj had mentioned earlier also, that profit is the holy grail of any business, and is our asset manager profitable? Here in this case, what we have seen is, if you look at the fractional real estate space, you have a lot of less asset managers who are heading towards the profitability for now. And we definitely see that. And there's a reason behind it, because the space is actually just 2 to 5 year old space. And we see a lot of new entrants in the market which are doing this and aspiring to become profitable. And we know that it is going to take time. Of course, they have a model in place where they are actually getting 1% of the management fee that they're going to charge every year on year. And also, they actually are going to make money once you are taking an exit as an investor. So we know that they will be profitable. But again, in this case, we know that MYRE would be profitable in the near future. But since it is not now, we have taken away that 0.25, because we definitely feel that and value that to any business tomorrow should be profitable. And that's the reason asset manager also needs to be profitable. Raj, what's your take on the client dashboard and why it is very important in any case?
So, if you see the mutual fund or the stock market industry, it's evolved and, it's matured to such a great extent that, everything is live today. You can track your NAVs, etc. Also, the fact that you can even exit, you click a button, in 3 days, your money is into your bank account, etc. So we also feel that the ecosystem for fractional ownership should evolve to that level. And therefore, one of the key things is the fact that whether the client can access their receipts, TDS, because the CA is going to come down hard on the investor saying, "Bhaiya, TDS certificate lao, rent receipt lao." So we don't want then the investors to run around, or there should be any kind of communication where the investor would have to follow up. Therefore, a central dashboard which allows the investor to log in and they have all these things ready, whether it's their what have they invested in, number one, number two, TDA certificates, rent receipts, etc. NAV MYRE Capital does on an annual basis, which we think is fair, acceptable, and therefore MYRE Capital has invested in technology to enable these kind of things, and therefore we give it 0.25 on 0.25 here. The next, while we say that a lot of this depends on the asset manager, and therefore if you see even all the overall weightage, earlier we used to give it like 1 on the entire scheme of things, like on 10. Now we've increased the weightage to 20%, 2 on 10. The reason for that is we are expecting the asset manager not just to pick up the right opportunity, maintain it, but also the most critical thing is an exit, right? Again, most players are pretty young, and 2 to 3 years is too short a time to give an exit for any asset or an opportunity. But having said that, this is an ideal situation that we want, and therefore if any asset manager is given a profitable exit for any of their opportunity, they should be awarded a 0.25. In this case they haven't, so therefore we take that away. Rishi, why is total asset under management important?
So like you rightly mentioned, profitable exit given to any asset or not. And since you have limited players in this space, I mean, who have actually had experience of more than 2 years, again in this case, that is the same point that I would like to attract. That there's a learning curve with every asset that gets onboarded, and when you get it funded, and when you actually are managing it, and when you give an exit. That's the entire life cycle of the entire asset. So when an asset manager is doing that, he definitely gains an experience and insights into how this is to be run, what kind of asset needs to be brought on board. If at all there is a tenant releasing that happens, there are certain issues that have cropped up in the past, and we have seen the tenants moving out, and there was a trouble. So all this experience get accrued with every asset that you get funded and you get on board. Yes, Raj.
So one of the thing I would like to add here is the fact that, apart while we are talking about larger things and all of that, even smaller things. For example, if there is a certain milestone which we are experiencing with a certain asset manager right now, after every milestone, the investor comes back and asks us, "Acha, what's next? What is going to happen now?" All those things. So ideally, this should be streamlined. Like, there's a fantastic book, called "The Best Service Is No Service." So the idea is that the investor shouldn't have had to ask any question. So that communication needs to be so crystal clear. The steps need to be, let's say, for example, you have a milestone and then you say, okay, this is what's going to happen next, all of that. So all of these things, again, very, very minor, small things. But as asset managers evolve, they will start understanding this kind of feedback, because see, ultimately, it's also linked to efficiency. If you have your relationship manager talking to, let's say, 100, 200, investors, and giving them updates, or calling their queries, where is the time for them to kind of do the next bit, right? So therefore these are minor things, but very, very critical. And therefore as they age, as they get more mature, I believe that a lot of things, we believe that a lot of things will be streamlined. Yeah, Rishi.
So that definitely brings a lot of value on the table, and that's the reason we felt that we should rate this particular point as well, or add this and rate them. So any asset manager who is managing up to 100 crores of an asset, or 99 crores to be precise, we are giving a 0. Anything from 100 to 200 is 0.05, 200 to 500 is 0.15, and 500 crore plus is 0.25. In this case, MYRE is managing close to around 150 odd crores worth of asset, and that's the reason we are giving this 0.05 for now, and we definitely want them to cross the 500 crore plus AUM and get that 0.25 in their bag. So here this point gets 0.05 on 0.25. Moving to hurdle rate. Raj, what's your take on the hurdle rate and why it is absolutely important, and why do we grade it? Why do we grade asset managers on the hurdle rate?
So the hurdle rate basically is a threshold above which the asset manager is going to charge you an asset management fee. They're going to take a cut on your profit, right? Now, this is a fantastic thing, because the asset manager has skin in the game, because again, while they're charging a 1% AMC, that doesn't suffice for them to be profitable, for them to grow. Their major chunk is going to come from that 20% performance fee that they're going to charge, which is again linked to the fact that they will be very careful, not only to what kind of asset they are buying, but also to the fact at what price they are buying, because they have to be conscious about the fact that 4 or 5 years down the line, we will need to give an exit. So hurdle rate, again, the lower the hurdle rate, is the lesser the ideal situation from an investor's perspective, right? So we have got asset management managers who are charging 8%, 10%, 12%. Now, what this means is that, let's say, for example, in MYRE Capital's case, they have a hurdle rate of 12%, which is fantastic. But let's say, for example, if they get the investor an IRR, or an annual growth of 12%, which includes the yield and the capital appreciation, then over and above that, they will charge 20%. Now, this is applicable only during exit. So investors don't need to worry about how is it going to be calculated, etc. during the term of investment, only when it exits. So in this example, let's say, for example, you've invested 100 rupees, and on a year-on-year basis, you've got 14% as IRR, and 12 is the hurdle rate. So they're going to charge 20% on 2 rupees. That's 4 rupees, right? So 20% on, over and above 12%. So which we think is very healthy, and therefore it gets 0.5 on 0.5 there. Finally, earlier we used to have 0.5 points to what we think. But Rishi, what is your take? We've reduced it to 0.25 paise. So
I think like we were overhauling our entire rating system, we felt that there are a lot of other objectives that were being taken care of, and we really felt that probably our weightage should go down and let the objectives or the points that have been mentioned here should take the lead. And that's the reason we have reduced it to 0.25. Now, in this case, we always feel that there are three criteria which should be definitely taken care of. That is the right location, you have a right asset, and you have the right tenant. Now, this mix is very, very good in this MYRE's proposal for now in terms of Vaishnavi Tech Park 2, where you have a very good location of ORR, that is Outer Ring Road. You have a very good grade A asset by Vaishnavi, that's Vaishnavi Tech Park. And you have a combination of a good tenant, that is SmartWorks, which is doing amazingly well in this field. So that's the reason we would definitely share that we should definitely go ahead with this investment. There is no second thoughts about this. Even if the tenant moves out, we know that the location and the asset grade are all in all a good combination to have. We will easily be able to again lease it or get a new tenant on board. So yes, Raj, would you want to share your input, and we can probably close this?
No, so I think you've covered largely everything. And also, the fact that we've worked on renewing this system is that that itself should speak, right, rather than us. So all in all, a thumbs up. If you're looking at investing, we think this is a good opportunity. If you have any questions about this opportunity, feel free to call us. Our numbers are on your screen. So therefore, now a tally of 8.5 on 10, which we think is great. So, do get in touch with us for if you want to understand the financial model, if you just want to understand, if you're new to fractional ownership and want to understand a little more, or if you want to compare it with other opportunities, please call us. Yeah, Rishi.
So again, this is a new rating system. This is the first review that we are doing under that. We are again open to our fellow investors, our friends who are in this field. They can definitely guide us if there are any inputs. We are absolutely open for any feedback that you guys come across, and we will see that how we can incorporate as well. But we definitely look forward to hear from you guys. Thank you so much.
So with that, if you have any, whether you like the video, don't like the video, comment and tell us. Also subscribe to our channel for future updates. And finally, just to let you know, we've got investors asking us, how do you guys make money? So the thing is, we don't charge investors anything. Our money comes from asset managers. So therefore, if you have any queries, again, feel free to call us. And with that, we will close this. Thank you so much. And we look forward to your comments. Thank you.
Thank you.